What's up, guys? Today I'm going to be going over kind of my optimization process when I do backtesting. For those of you that didn't join the stream from a couple weeks ago when I went over kind of my backtesting process, just to kind of catch you up when I do this. So I've already figured out the strategy. I've done kind of initial backtest. I've gone through and audited the backtest to make sure the trades like lined up with my rule sets. And at this point, this is generally when I'll kind of fine tune and try and figure out like little tweaks to my entry, my stop loss, my take profits, so that I can kind of get a little bit more out of the strategy. And I'll like kind of when I'm doing the back test, have all kinds of ideas in my head of things that I might want to like take a look at and see if it's worth adjusting them. And I'm going to kind of run through a lot of those ideas and also kind of share a template with you guys that you can do it yourselves. So. Really with optimizations, you're talking about adjustments to entry, stop loss, take profit primarily. There's a couple other things that I'll share with you guys as well. But when you're talking about adjusting entries, there's really only kind of two things that I was really wanting to share with you guys for this. Obviously, if you have, I guess a zone that you're entering off of, in this case, a fair value gap, entry adjustment that you could consider is instead of entering kind of immediately after it's tagged, to maybe enter at the midpoint. I've seen a lot of people use that instead. And if you need to capture this in FX replay, I've seen a lot of you, you want the rectangles with the midline, but the parallel channel tool within FX replay, this guy right here, this will give you the midline as well. So that's another good way to capture that. Another thing is maybe you're looking to enter based on a fib retracement, and you're kind of playing around with different fib retracement levels. So that could be another reason or way to adjust whether you're trading, ICT's OTE model or something different, and kind of play around with the different, I guess, fib retracement levels for your entries. Personally, I don't adjust my entries that much. I generally will focus more on the stop loss and take profits because my entries are based on a pretty reactive level typically, so I don't want to get too cute and try to get a slightly better entry. I'd rather just enter where the expected kind of reaction is and just fine tune the other things. But if you want to, those are some options for entry. Stop loss, there's kind of three graphics I have here that you can think about. The most common one that I'll use is, instead of using like the wick low or high, obviously vice versa, is try and tighten up and use the body. And this is going to give you better risk to reward, but it will also reduce your win rate. So for kind of testing anything where you're tightening up your stop loss, you really have to take into account, does this increase my profitability percentage-wise more than it reduces my win rate? Because if not, then it's not really worth doing it. But this is a really common one that I'll kind of check. Is it, if I can get, maybe 30-40% more risk to reward by a tighter stop loss, then it might be worth doing that. Another thing that you'll hear me say a lot is kind of different lines of defense. So I recently went over the unicorn model that had basically a kind of breakers with fair value gaps. That recording should be on the YouTube in a little bit or later if you guys need it. And in this case, you can kind of think about how, so there's, for potential continuation to the upside, there is two fair value gaps and this kind of big breaker, these two green candles basically, that price broke structure to the upside. So you can decide, do I want to kind of use a conservative stop loss below kind of all three of these lines of defense, or do I want to maybe tighten up and I'll take two of them, so maybe below both of these fair value gaps, or do I want a super tight stop loss? I want an immediate reaction off this first fair value gap. You can kind of play around with different, I say lines of defense, it's essentially like how many things beyond your entry will support price moving in your favor, and you can kind of consider those lines of defense. And obviously with additional lines of defense, your win rate should go up, but you'll capture more R with a tighter one. So this is just something you can play around with your stop loss. And then this is more specific to kind of range breakouts, but if you have like strategies that are based on price breaking out of a certain range, you can kind of play around with stop losses based on standard deviation measurement. So a lot of time you'll see kind of a breakout and enter on the retest, and then people will put their stop loss at kind of the midpoint of the range. You could play around with it and maybe use the 0.786 or 618, or something based on the price structure itself, to kind of play around with your stop loss. But you can also use standard deviations or kind of fib retracements to play around with the stop loss for kind of ranging markets. So those are really the main things that I would take a look at with stop losses and entries. The one that I'm most excited to talk to you guys about is take profit, because I think this is something that pretty much anyone can use to try and hold your winners a little bit longer. And the whole point with take profit optimizations, or at least with the trailing stop loss, is maybe you have some winners, and the whole point with the trailing stop loss is, okay, now that I've hit my kind of primary take profit, I'm willing to risk a little bit of the profits that I've made in order to try and hold the winner longer and capture additional profits. And there's really multiple ways to do this. I want to show you guys kind of in the chart here how you can actually apply different trailing stop losses, and I'll show you guys the one that I use and kind of a couple other options. So this is like just a very simple, basic trade you could potentially use based on a market structure shift. So we took out this low, and I'm really just entering kind of on a retest of that low with a stop at the high and targeting out like 2R. Let's say this is kind of our basic reversal model, and there's kind of 3 different trailing stop losses you can use. The one that I use, I call it kind of a price weighting trailing stop loss, and basically what it is after the price hits your kind of primary take profit, you will start trailing to the candle before the candle that kind of hit the take profit. So you can see here this blue line, I have kind of the candle before the one that hit my take profit. I'm kind of trailing my stop loss there. So if price comes back to 1.42R, that would kind of tag me out. And then as it continues to move in your favor, you drop the trailing stop loss as kind of new lows are swept. So it can be structural lows. So obviously this low over here, I would do the same thing. So this is the candle that took that low. I would trail my stop to the high of the candle before. And then it could also be internal lows. So we have a move down here, a move up, and a new low created there. So same thing, this candle that swept this kind of local low, I would trail my stop to the candle before. And then finally you have a low back here that price took out. I would trail my stop to the candle before. And ultimately this trade, using this kind of price weighting trail, would have gotten you 3.32R, over 50% more than kind of the base model. 2 other ways that you could use a trailing stop loss are based on market structure. So you can basically, in a downtrend, you want to see market structure continuing to the downside, and then if you see a reversal to the upside, that's when you exit. Basically continuing to ride it while it has the market structure in your favor and exiting when it stops. So in this case, we have kind of bearish market structure after our take profits, and then finally up here we have a close above this previous high. So you probably would have caught like 3.02R on this specific example, or on the 5-minute time frame. The last example for a trailing stop loss is just kind of a fixed 1R trailing stop loss, like whatever point it gets to after my take profit. I'm not willing to lose any more than 1R. So kind of walking through, as we were coming down here, we got up to 3.36R. So at that point you could have trailed your stop to like 2.36, and then as it continued to go lower, the lowest point it got to is 4.76. So if you were using a 1R kind of trailing stop loss, you could have got about like 3.76 with this specific example. And I will say, like, I've found, at least for indices, that the 5-minute time frame is generally the best for kind of these price weighting and potentially market structure trailing stop losses. Anything higher than that, obviously if you're trading futures, you have to close by 4 p.m. Eastern, so it's not really worth. You can't hold anything like too long, but if you're trading Forex or gold or crypto or something, maybe you could use a higher time frame for your trailing stop losses. But yeah, I think this is a really exciting one that a lot of you guys are gonna hopefully start being able to hold your winners longer. And I'll show you how exactly I'll kind of run these optimizations. But the whole point is that you can, after your kind of after your trades are winners, they hit your basic take profit, you can try and trail the stop loss to try and hold them a little bit longer and capture more from your winners than just kind of the basic level. There are a couple considerations with this in terms of like how to apply it. I kind of went over the ways you could apply it, but also when to apply it. So generally, kind of, I guess for my models, I'm not really applying the trailing stop loss until my primary take profit is hit. There are certain cases where if you're going for maybe a more aggressive stop loss, you want to, maybe if you're going for a liquidity level at, something over 3R, that maybe at least once it hits 3R, you want to start trailing with a 2R trail at that point, so you don't round trip the whole thing. You can also kind of play around with that, like trade management. Do you go break even after a certain point? But in terms of these specific trailing stop losses, generally kind of rule of thumb is to apply them after your kind of basic model take profit is hit. And then I also like to use the could have profit or break even statistic in FX Replay's analytics to kind of see if my take profit is too conservative or aggressive. So in here you can kind of see these this metric, could have profit or break even. This basically shows you how many trades got over 1.2R in profit and then came back as a loss. And so it gives you really good information. You can divide this number of trades by the total number of trades to give a percentage of kind of how many trades came back on you. In this case, it's 8%. And kind of the rules of thumb that I have for this is if this statistic is less than 5%, then your take profit is probably a little too conservative. You have like more room, I guess, for your trades that you could maybe try and increase your average risk to reward or apply a trailing stop loss to try and capture a little bit more upside. And then vice versa, if this number is over like 20%, like a fifth of the trades you're taking kind of come back on you, then this indicates your take profit is probably too aggressive for this specific model. So maybe you need to pull back. Maybe if you're going for like 4 or 5R or something, maybe you need to scale that back. And potentially also consider some trade management, maybe going to break even after it hits 1.5 or 2R, or doing a trailing stop after it hits 3R, different things like that you can play around with. But I think this statistic is super helpful to give you insights on kind of how your take profit is, if it isn't too conservative or aggressive. Really, some other considerations are there certain filters you could apply to the trades in your backtest that would maybe help filter out losers, or maybe add additional confluences. So maybe you only want to take trades that align with a certain daily bias, maybe that only align that are following the trend, maybe aligning with moving averages. Maybe you want to filter for trades that have low resistance low resistance liquidity, which is essentially like trendline liquidity, or maybe you only want to take trades that have more than like 3 confluences. So there's different ways to kind of look at filters, and I'll show you guys in the template how to do that as well, to see is it worth kind of filtering out trades unless they have certain criteria. And then really the last thing, a couple other considerations are if you have a super tight stop loss model, it may be worth doing multiple attempts for those trade setups. So maybe the first attempt stops you out, but then it kind of comes back for a valid entry. Is it worth taking a second attempt? And for this one specifically, you can't really use my template for this, but I would honestly, when you're doing the backtest, just come in here, and when you place the order, I would probably just use a tag here. Sorry, let me capture this. So you can come in here for the tags and maybe put like second attempt or something like that. And then when you go into the analytics, you can filter all of those trades and see like, is it worth taking 2 attempts for certain trades. And then also you could potentially adjust your risk based on confidence. So if you have a way to kind of scale, how confident am I in this trade? Is it in the right session? Or are there, multiple confluences? Is it a news day when there's maybe a little more volume and volatility? If not, maybe it's valid with the model, but maybe I scale back to like half risk on those trades, or vice versa. If all the stars are aligning and this trade is like the best trade setup you can have, is it worth increasing your risk on those trades and seeing kind of how those adjustments impact your results? So now that I've kind of shared with you guys all the different things you can potentially optimize, I want to actually show you guys kind of a template and how I actually perform these. So I'll be sharing with you guys this Google Sheet that I have. It's super simple, and all you got to do is when you are in FX Replay, you'll hit this export button, and whatever time zone you want, it'll give you kind of a CSV file of whatever trades you took with the model. And then I really just have 3 fields in here that you need to input. These first 2 are really just as a reference point for you as you're kind of going back through to see like, okay, this trade was on this date, make sure I didn't miss any or anything like that. But the main one is this average risk to reward. So this is the actual like results from all of the trades that you took, and I have kind of an example here. So this is from this gold backtest that I showed you guys a few weeks ago. And then once you've kind of input these fields and you just paste values when you drop them in here, once you have these in here, the main thing that we're going to be adjusting is taking a look at this adjusted R. So of all these different potential optimizations to take profit, stop loss, entry, filters, etc., how many of, what are basically the results of these new trades? So as I'm going back through, I'll literally just kind of scroll back through my backtest, and I'll take a look. Okay, if I want to tighten up my stop losses, this one would have been 3.8R instead of 2.23, or if I was trailing this stop loss, okay, we swept this low over here. If I was using price weighting, I would get stopped out here at 1.42. So whatever I'm adjusting or optimizing, I'll kind of go through and see what would the results have been making that adjustment, and I'll record all of them in this kind of adjusted R field. And at the end of the day, the main thing you want to see is either one, does the profitability percentage-wise increase more than the win rate decreases, or vice versa. If you're kind of filtering out trades, does the win rate increase percentage-wise more than the profitability decreases? And so I have just kind of some math in here that'll kind of do that for you guys. And then for the filters, it's just simple yeses or nos. Like say you want to, put in here, do these trades follow my daily bias, or do these trades have more than 3 confluences, or whatever you want. You can put yes or no for all of these, and then I'll have kind of some math that'll calculate, like, is it worth applying these filters or not? So you really are just kind of scrolling back through your trades, adjusting kind of the position size tool based on kind of the adjustments you're making. Maybe I want a slightly tighter stop loss. I had 2 lines of defense. Maybe I just want 1. Same thing. Maybe I want to tighten this up a little bit, and I'll kind of see how that impacts things. But you just got kind of scrolling back through your backtest, and I guess a quick hotkey, if you do make adjustments to these and just to kind of see where it is, but you don't want to like mess up your backtest, you can either kind of use the undo button up here, or the Control Z is the kind of quick undo button. So that's what I'll use if I'm, okay, 1.42, I'll write that down, and then I'll kind of undo to make sure my initial kind of trades are left alone. But yeah, that's pretty much everything for kind of how I run optimizations. I really hope this is helpful for you guys, and that you can kind of get some more out of your strategies by making fine-tuning adjustments, and hopefully it'll improve your performance both for your models as well as live execution. So I'll be in the Discord if you guys have any other questions, but hopefully this is helpful. And yeah, I'll catch you guys later. Bye.